Welcome to the Deep Dive, your weekly shortcut through the currents of hotel and travel distribution. This week, we've gone through the latest stories curated by White Sky Hospitality, really looking for those, fascinating, crucial insights for you. We're seeing some pretty powerful forces, huge growth, interesting tech, but also some persistent challenges underneath.
Absolutely. And our mission really is to pull out the key nuggets from all this, connect those dots, and hopefully show you the trends and opportunities that matter for your strategy. It's about helping you anticipate what's next, not just react. So let's get into it.
Okay, kicking things off, let's talk business travel. It's roaring back. Navan's research with Euromonitor sees global spending hitting nearly $2.9 trillion by 2029. That's up from about $2.1 trillion this year. A 6.8% compound annual growth rate. Pretty impressive numbers.
It really is. But, what's fascinating when you dig deeper, it's the small and medium businesses, the SMEs. They're actually growing faster, 7.1% CAGR. Their folks just travel more often. And the really big opportunity here, it's in unmanaged travel. Get the 65% of total spending happens outside the usual TMC systems.
65%. Wow.
Yeah. Even companies with PMCs see maybe 10% booked independently.
Yeah.
For convenience, right? We've probably all done it. And then there's U.S. leisure spending that's expected to surge like 87% by 2029. So it really makes you think about where hotels should be focusing their direct booking efforts.
That unmanaged piece is definitely something to watch. Okay, so speaking of where travelers put their loyalty, let's switch gears to hotel brands. The Hotels 50 report, it shows total brand value hitting $58.8 billion. That's up a solid 4% year over year. And Hilton, wow, 10th year in a row as most valuable.
Right.
$15.1 billion, up 30%. Global expansion, smart lifestyle positioning.
They're doing well. Yeah, and Hyatt climbed to second, right? 32% growth, $8 billion, adding loads of rooms to the pipeline. But this brings up a really important question, doesn't it? What about brand strength? It's not just about dollar value. Like, Taj leads here with a super high brand strength index score, almost total awareness in India. But then you look at Hampton Inn, huge revenues, over $10 billion gross room revenue, but they actually dropped to fourth in strength.
Interesting. So massive revenue doesn't automatically mean top-tier strength.
Exactly. It really highlights the pressure, especially in that mid-scale segment. You're fighting hard for awareness and loyalty, often with tighter margins because they're the luxury. So it begs the question, how should you measure brand success?
Right. Value versus strength. It's a key distinction. Okay, so thinking about connecting directly with travelers. There's this new player, DirectBooker. They're aiming to use AI to challenge the OTAs. This could be a potential game changer for direct booking.
It could be. The idea is to use something called the Model Context Protocol. Think of it like a universal translator for AI. It lets AI systems talk directly to hotel inventory systems, getting real-time data, supposedly bypassing the limitations you get from current OTA partnerships.
Because those partnerships only give partial data, right?
Often, yeah. But the technical hurdle for DirectBooker is, well, it's massive. You're talking about tracking potentially 300 billion price points daily across 500,000 hotels.
300 billion. That's astronomical.
It's a colossal data problem.
Yeah.
But their team, they've got serious experience from places like TripAdvisor, Google Travel. They believe they can crack it. Their bet is on capturing that, 70% of travelers who say they prefer booking direct and becoming the sort of go-to endpoint for AI travel queries.
Incredibly ambitious. Definitely a long-term play, you'd think, given the scale and how entrenched the OTAs are.
For sure. It's one to watch, though. Now, shifting continents, let's look at a real success story. Saudi Arabia, they welcomed 116 million tourists last year. Spending hit over $283 billion. Inbound spending alone was up 19%.
That's just staggering growth. It feels very strategic.
It absolutely is. And here's the key strategic win: non-religious tourism. It's now 59% of inbound visitors. That's up from 44% just back in 2019. Leisure spending specifically, $36.4 billion. That's a 565% jump from 2019.
Wow, 565%.
Yeah. They're leading the G20 in international tourist growth, leading major destinations in revenue growth. It shows what's possible with massive investment, yes, but also really focused strategic diversification and infrastructure build-out. It kind of challenges assumptions about how quickly emerging markets can pivot their entire tourism identity.
A really powerful example. Okay, finally, amidst all this growth and AI ambition, we have to touch on the less glamorous side, infrastructure issues. The basic plumbing of travel connectivity still seems to be a hurdle, doesn't it?
It really does. It's kind of the foundation everything else is built on, and it's shaky in places. APIs are still fragmented, often unstandardized. Constant adjustments needed. Remember the airline NDC rollout? That hockey stick effect?
Oh yeah, the sudden complexity spike.
Exactly. It caught a lot of the industry off guard. And now with AI, development changes so fast, almost monthly, that projects can become obsolete before they're even finished. Creates real strategic confusion. There's a big opportunity, though, in post-booking automation. It's repetitive work, but needs skill. Yet there's still this cultural resistance sometimes to automating those processes.
So the tech might be there, but the systems and maybe the mindset aren't quite keeping up.
Sort of. The future really needs connectivity providers to be more than just passive pipes. They need to become active intelligence layers, adding value, enriching data, maybe even predicting demand shifts. It's about building a smarter foundation.
Okay, so pulling this all together, what's the bottom line for hoteliers listening today? We got booming business travel, tricky brand dynamics, AI disruption, infrastructure headaches.
Yeah, it's a lot. I think the main takeaway isn't just adapting, it's really trying to anticipate. How does your current strategy stack up against that huge unmanaged travel opportunity? Are you thinking about brand strength, not just value? How might a direct booker, even if it's long-term, change your direct booking approach? What can you learn from Saudi Arabia's rapid diversification? And maybe most fundamentally, how can you push for or adapt to smarter, more integrated infrastructure in your own operations? The real question for you this week is, what's one proactive step you can take based on these shifts?